Hello and welcome to the Global View on this Wednesday. I'm Andrew Gagan. Good to have you with us again here at AusBiz. Now let's take a look at what has happened over the course of the overnight session there. Confirmation that the United States will impose duties of 104% on imports from China, which will take effect early this afternoon, our time. In an extremely volatile session, stocks on Wall Street sank in response as China vowed to fight to the end, saying it will never accept the blackmail nature of the US and Trump's threat to ramp up tariffs on Chinese imports. Well, the S&P 500, which had led more than 4% earlier in the session, tumbled below 5,000 for the first time in almost a year to end the day on the precipice of a bear market. Apple and Nike slumped, with each company's manufacturing and supply chains highly integrated with China. Apple has now lost more than 20% over the past 5 days. Chipmaker Micron has told customers that it will impose a tariff-related surcharge, while US clothing retailers said they're delaying orders and holding off on hiring. Well, the tariff turmoil comes as US companies prepare for their quarterly earnings reports, with JP Morgan, Morgan Stanley and Wells Fargo set to report on Friday. And elsewhere, health insurer United Group and Humana jumped after the US announced a 5% increase in payment rates to private insurers. Well, as the trade war between Washington and Beijing intensifies, the Trump administration has said it will not prioritise negotiations with the world's second largest economy. The administration has scheduled talks with South Korea and Japan, along with the Italian Prime Minister, who is due to visit Washington next week. And the European Commission is considering counter tariffs of 25% on a range of US goods, including soybeans and nuts, with officials saying they're ready to negotiate. Well, the impact of tariffs has seen US small business optimism turn negative. That index there posting the largest decline in almost 3 years. Meanwhile, Fed member Austin Goolsbee has said the tariffs are way bigger than he expected, saying we can't really wait to the end of the quarter plus 1 month before we find out that investment really dropped off and GDP growth is shrinking and we start seeing layoffs, unemployment, or on the other side, inflation starts soaring. Well, the US 2-year Treasury yield is at 3.68%, the 10-year rising to 4.27 with the 2 to 10 curve at its steepest since February 2022. And the US dollar index is down on the day, with safe havens the Swiss franc and yen outperforming there. The Aussie has fallen back below 60 US cents to be at 59.5. And Bitcoin has tumbled to around 76,500 US dollars. Well, commodity prices also remaining under pressure on the prospect of slower global growth. Oil prices falling to a 4-year low as investors price in an increasing likelihood of a recession. Brent futures 2% lower at $62 a barrel. Copper has fallen more than 1.5%. Iron ore is down more than 3% to close to a 6-month low at $96 a tonne. And gold has paired gains, having risen more than 1% earlier in the session. Gold futures there around 0.5% higher at $2,990 an ounce. Well, so much to look at on markets at the moment. Let's get across it all from a US perspective. John Blank is joining us from Zacks Investment Research. John, good to catch up with you again. So the focus very much on this forthcoming tariff on Chinese goods. What are you seeing as the likely impact, bearing in mind the Chinese are hitting back?
Andrew, I wish there were visibility. I mean, this is, people think you get a tariff emergency like this, and we should use the right language, Andrew. This is a tariff emergency. There's lawsuits that are going to be filed by the Chamber of Commerce on whether this is in fact an emergency. So, there's one out already, which is that the Trump administration loses yet another case because this is not an emergency. The other out is there's 7 or 8 Republican senators now on board for taking power back from the president on tariffing, and there's a dozen or so Republican congressmen who are also on board for the same motion. So here we sit waiting for this chaotic president to, start deals with all these countries. He says he's not going to do a deal with China first. He's going to do Japan and South Korea, as the Real pointed out earlier. But again, who knows? Who knows what this guy's going to do? So this is the basic problem. We have a trade policy uncertainty index at COVID levels. So we have basically recreated a COVID style event And it either is a recession of 2 years or 3 months. I mean, most people think already, looking at the Q1 data, we're going to get a 2.8% decline in Q1. We're getting very close to seeing whether that's really true. But when all the data is on a model at, the whole quarter's data in, it's hard not to argue that we're going to get a minus 2.8. All the conference board, consumer studies and growth index expectations are looking at 1% for this year. So, what is his achievement? Core prices, consumer prices moving up into the threes and leaving the twos. Very hard to wonder what tangible personal benefit he gets, and then what the country gets. So here we sit, waiting for this soap opera to play out, basically, Andrew.
All self-inflicted, of course, John. Has the damage already been done, particularly when you look at business and consumer confidence?
Well, I mean, look, the bear markets are in place. The Nasdaq's down 21%. The Russell's down 21%. The S&P 500's down 15%. The Dow's down 11.5%. The VIX is at 55. So what does that tell us? It doesn't tell us a lot. I think the thing I get some gravity with is that you've got a year of time passage where basically a year of the stock market is gone, and that's a kind of like a year of growth gone. So the GDP models say 3% growth is basically going to be subtracted 1 to 3% from these tariff wars. And that's basically kind of what happened with the stock market. We lost an entire year of the stock market. So it's hard to argue that this is not an event of great significance in terms of cost already. A year's lost growth is basically what's happened. So now we're just see if this thing trails off into a major recession or a minor recession. I think it's really the only intangible right now, Andrew.
John, which sectors are you seeing as most sensitive to what's playing out with these tariffs?
Yeah, I mean, number one, the industrials, industrial names, because the aluminum and steel tariffs are in there, the automotive tariffs are in there on top of all of it. China is a big manufacturing component area for these groups. Other part is infotech. I mean, Apple iPhones are made in China. There's word out they sent several plane loads of iPhones over today to get out from facing these tariffs. So it's just not a good situation, and it's going to take a long time for it to get it resolved. So when you're looking at infotech and industrials, those are the big ones. Consumer discretionary would be the third. Because they have a serious problem with prices, and all the consumer discretionary is. So, that has been already, telegraphed in terms of the S&P sectors pulling back. Infotech and consumer discretionary already went down. So we've already seen it. It's already been pretty well telegraphed, and then it just kind of spreads out from there, through all those cyclicals to the defensive end.
Now, John, quarterly earnings are ahead. They begin on Friday with the big banks. What are we going to be hearing from those companies, do you think?
It's going to be a first quarter event. So half of this, through February is going to be just fine. And then they're going to give us some story about March. I looked in the financial stress indices this morning. They're not showing a lot. Leverage loan losses a little bit, high yield bond losses a little bit, but they're pretty small, losses in returns. So I would think the banks will probably, come out pretty clean and probably give us a decent report for Q1. The bigger problem is what they're going to show for us over the next year in terms of their outlook. That's where we can get a big pullback from the banks, is if they start loan lossing on recession risk. That's really what we're going to find out on Friday.
All right. John, look, we've just got a couple of minutes left. Let's get to your three stocks as we normally do. Just quickly run through those. One of them is a Chinese stock, interestingly. The first one you've got there is Veeva.
Yeah, Veeva Systems is a great stock, ticker VEEV. This is a life sciences cloud provider. They basically, say if you're doing an FDA trials of a drug or something, this is a type of company that gives you a cloud systems to track it more easily. And so it's widely used. It's a $30 billion market cap stock. And you got to pull back here to, basically like I've got a 209 price and we've got a 256 target price. So again, if the market rallies, a stock like this with a lot of traction in its earnings and a big, strong base of customers, and basically customers that are in that nice life sciences area, health area, which is somewhat defensive, you got to like a name like ticker VEEV.
All right. You've also got a French bank, Société Générale. Why are you looking at this one?
Yeah, Andrew, I mean, just to give you an idea, VEEV is a price earnings ratio of 29. I got Société Générale at six times earnings. So you can buy this stock at $7.50 a share right now. And it will make $1.50 a share in earnings next year. So you got to ask yourself, if people rotate into, Europe, into infrastructure, into defense, into tech, aren't something like this conglomerate bank, sixth largest bank in Europe, is it not going to get a bid? The stock's been running up pretty strongly on that idea, but it's pulled back to a couple dollars a share at this latest tariffing noise. But you got to kind of put this one on your radar because it's so cheap and it's so well positioned.
And just finally there, John, of course, intense scrutiny of what we're seeing in China at the moment, given what's playing out. Baidu is on your list. That is the internet search provider.
Yeah, Chinese language search provider, of course, the Google of China. $11.70 in earnings, and you can buy this stock for $76 a share. So that's a 7.9 PE. So you look at, this is the conundrum for the global markets. You've got Veeva at a 29 forward PE. You've got, Société Générale at 6, and this stock, which is a marquee stock in China, is just under 8. So the question here is, how does these valuations play out with this global recession and all these tariffing situations? It's a puzzle, and I don't think it's anything more than a soap opera. And that's the problem here, is it's not a fundamental story anymore. It's a chaos story. It's an uncertainty story, and I think the answer is none of them move until that uncertainty lifts.
John, great to get across what you're seeing. Thanks so much for joining us on Zacks Investment Research.
You bet, Aaron.
All right, let's come back home as we just get prepared to open this Wednesday, and we're looking at a very negative session ahead. So one day it's up, the next day it's down. That has been the pattern. More recently, extremely volatile. SPY futures off 1.9%. We are going to get right across that in just a couple of minutes' time.